Well, here in Spain, Cathal Rochford joins me again this week, and we're going to continue exploring estate planning considerations for UK nationals in Spain. How are you doing, Cathal?
I'm keeping great, Howard. How about yourself? How are you?
I'm very well. Nothing's much changed over the last week, I can say. Anyway, talking about last week, we covered Spanish succession law, wills, and the importance of reviewing your estate planning on moving to Spain. If you missed it, you can find it on the podcast page of Blevins Bank's website. This week, Cathal will focus on inheritance taxes. So, let's start with Spanish inheritance tax, or succession tax and gift tax, as it's known here. Who does it impact, and how does it work?
Yeah, so Spanish succession and gift tax is the Spanish equivalent to UK inheritance tax that many of our listeners may be more familiar with. Succession tax is due if the asset being inherited or gifted is located in Spain, regardless of where the recipient lives, or if the recipient is resident in Spain, regardless of where the asset is located. This impacts anybody who receives a Spanish asset, either via a gift or as an inheritance, regardless of where they live, or anybody who lives in Spain and receives a gift or inheritance from anywhere in the world. The tax for succession tax is calculated on and paid by each recipient. Rates and allowances vary according to the level of kinship between yourself and your heirs. The succession tax rates depend on the familial relationship between the estate holder and the recipient, and usually in Spain, close family transfers usually result in a very low or even zero tax rate being applied.
Each Spanish region can adjust the tax rates, allowances and exemptions. So does what region you live in make a big difference?
Yes, it does, Howard. In recent years, many regions across Spain, we've 17 different autonomous regions, have improved the succession tax rates and the allowances available. For example, I'm based in Mallorca, and since July of 2023, there's now a 100% reduction in succession tax for close family inheritances. So that's covering transfers to a spouse or to children or grandchildren. So it's very, very attractive. Across other regions where we have offices, including Valencia, Murcia, Andalusia, and the Canary Islands, there are reductions also and reliefs available, which are as high as 99% for inheritances. So this general direction of change has been very welcome news, and it's really reduced the amount of tax one's beneficiaries or heirs will pay. Under the state rules in Spain, tax rates start at 7.65% and rise as high as 34%, and multipliers based on the familial relationship and beneficiaries' net worth can also take the rates much higher. So there is a variance between the state rules and the various regions, and careful planning is definitely needed to ensure you know what regional rates apply, the rules, the allowances, so you can ensure that you're aware of what taxes may apply to your family in the future. So it's just important to plan this carefully and ensure you know where your beneficiaries live, where your assets are, so you can understand what taxes may or may not apply.
Does UK inheritance tax continue to impact UK nationals living here? And what happens if you're liable to both taxes?
Yes, Howard, yeah. UK inheritance tax can continue to apply, and the inheritance tax liability has been determined by domicile rather than residence. And domicile was a sticky concept that meant that most British expatriates remain liable to inheritance tax on their worldwide assets. However, since the recent budget last year, a new residence-based system will replace the domicile system from the 6th of April 2025. So on leaving the UK, you will remain liable for inheritance tax on your worldwide assets for between 3 and 10 years, depending on how long you've lived in the UK before relocating. And if you return to the UK after living abroad, you will be assessed for inheritance tax on a worldwide basis once you have been living back in the UK for 10 of the last 20 years. So if, on the other hand, you manage to break your long-term residence with the UK, you'll only be assessed on your UK assets for inheritance tax. So overall, I think the new change in the long-term residence test versus domicile has presented an opportunity for many people who have left the UK and have moved to Spain for the longer term, where after 10 years they can be very certain that they've mitigated a very large burden of UK inheritance tax for their family later. To your question about if both taxes can apply, Both taxes can apply. You could be subject to succession tax and UK inheritance tax. And this is quite common because UK inheritance tax is usually assessed first at the estate level, and then succession tax may be applicable to the recipient afterwards. However, if UK inheritance tax applies, it usually offsets the succession tax due on the beneficiary. So we usually don't have to worry about any double taxation. You'll usually just pay whichever rate is higher. There's been a unilateral convention as part of the tax treaty between the UK and Spain, which ensures that, there will be an offset there between both inheritance tax and succession tax in Spain.
Well, with everything considered, what is the key advice you have for British expatriates about estate planning and protecting their heirs?
Yeah, so I think estate planning is complicated, and especially if you're operating across multiple jurisdictions or you're an expatriate living in Spain. As we touched upon, you could have implications with UK inheritance tax, whether you've lived there recently or you've got assets in the UK, and you also have to contend with succession tax. So I think the advice is quite simple. Take professional, regulated, qualified advice from specialists and experts in this field. From a firm like Blevins Franks, we've been doing this for 50 years. In fact, this year's our 50-year anniversary. And we've heavily focused on estate planning, tax planning, and broader financial planning across the board. And usually the tax savings and the work we put in place for our clients at the estate planning level makes a massive difference to the level of wealth that passes down to the next generation. So I think it's crucial that you have an advisor who has the technical skills to plan matters covering both the UK and Spain, and ensure that you have a strategic financial tax and estate plan in place for yourself and your family later. And this really can make a difference and avoid getting things wrong. One statistic that is it's quite a strong one is that usually 70% of wealth is lost when assets pass down to the next generation. And I think having the right estate plan in place can mitigate that. Estate planning, the longer you leave it, the more expensive it becomes. So I think being proactive, looking at these things early, realizing that a proper estate plan usually takes many years to formulate. I think you'll get your estate into a very, very tax efficient, simple, and a good position for your family later.
Before I let you go, Cathal, can you remind listeners about the seminars you mentioned last week?
Yes. As I touched upon last week, we'll be having seminars across Spain. We'll be kicking our seminar season off in the Costa Blanca at the Marriott Hotel in Denia on March 11th. So my colleague Brett will be giving seminars there. He'll be looking at recent changes in Spain and the UK that will affect British expatriates, including inheritance tax and pension reform, changes in Spanish visas like the Golden Visa coming to an end in April of this year. And also there was a proposed property tax as high as 100% for non-EU buyers. So we'll be tackling all these areas. And for our listeners further out in other areas, we'll also be having seminars across the Canary Islands, in the south of Spain in Marbella, and also in Mallorca. I'll be giving a seminar on the 29th of April. And so there's plenty of events across Spain this year. And I would say for more information and for booking online, please visit our website, blevinsfranks.com. It's well worth attending one of our seminars. There's always some very valuable insights, updates, and market updates as well. So I'd recommend anybody to come along.
And they can book at the website, which is, of course, blevinsfranks.com. Cathal, thank you very much. It's always informative.
Thank you very much, Howard. I look forward to speaking again in a couple of weeks' time.